Hey folks, so as I mentioned in previous videos that I was expecting on ETH at least to move to sort of the 1800s levels running into the end of the month as part of the suckers rally, and we've almost got the 1700s. Annoyingly, TradingView always shows this first bit first. Yeah, and Bitcoin again has rallied up into it. So this red zone is basically an area of sort of news volatility slash triggering potential here, and I'll share why in a second. So yeah, a suckers rally is that, for by definition it's something which is rather volatile and fast, and it's hard enough to basically coax or coerce people into thinking it's the bull market when it really isn't. The fundamentals have not changed, and so the reason why we have this red zone here is because if we have a look at the news calendar, basically from at the end of the month or early February, we have a whole bunch of big news that actually moves the markets. So on 31st of Jan, we have ISM and unemployment. Oh, sorry, no, wrong one. Let's look at the US ones. Yeah, sorry. On the 1st of February, we have non-farm payroll, ISM, and more importantly, FOMC with Fed funds. Then the UK follows the next day on the 2nd of February. The ECB is going to have something to say the next day. Unemployment rate again on the 3rd of Feb. And I think that's the week. Yeah, so this is the week really where I see shit sort of hitting the fan. Yeah, and then also we have earnings for the FANG TM stocks basically. So if we scroll right down here, so Facebook's earnings are on 1st of Feb. Then we have Amazon again 2nd of Feb. Apple 2nd of Feb. Yeah, it's all Netflix has already had theirs. Again, it was a negative earnings call, but the market rallied because everything is rallying at the moment. So that's not really, yeah. And then we've got 2nd of Feb. So basically 2nd of Feb, loads of companies are announcing. Yeah, that's the 25th of Jan, so that's tomorrow. And then Microsoft. Ooh, that is today, isn't it? Yeah, that's today. Also, just an interesting thought. It'll be interesting to see if Tesla have sold their remaining Bitcoin, which we'll find out tomorrow. That could be interesting for Bitcoin. But again, as I mentioned, the beginning of February is going to be an absolute news triggering cluster mess. Which, yeah, again, I think it will be the start of crypto starting to fall, and Sucker Punch will have been triggered. So yeah, I'm still sat in cash. I had 10% of my pot in ETH, which I bought at 13.50, sold at 15.36. Again, not the best exit, but hey ho, I'm out. And again, from a risk to reward perspective, it's much better to be out of the market at the moment because the fundamentals have not changed. Trillions are earmarked for crypto, but they're not going to get in until we have US-based spot ETFs. BlackRock, Grayscale, Winklevi Brothers, they're all trying to do it, but that's not going to happen until we have crazy regulation, and we haven't had the big SEC regulation hammer. And basically any crypto that did an ICO is a security, really. It doesn't pass the Howey test. So that includes Ether, it includes freaking everything. All the big alts that you can see are basically an SEC, under the purview of the SEC. They are a security. And Bitcoin's the only thing that sails above that SEC sort of risk. And again, looking at the big picture, don't forget, this is the first, like, the US has never ever had a contracting currency supply, and that is where we are right now. Yeah, and one other thing, this is more of a UK based thing. I always keep an eye on the house prices. So this is the average house prices in the UK. They've started to take a bit of a tumble, and that's mainly because mortgage approvals have started to tumble, which is why house prices are starting to fall. And I think this is going to continue to go down. And what's most likely to happen is if we compare UK average house prices against UK currency supply, I see something like this happening, because eventually when shit hits the fan and the Bank of England starts printing like no tomorrow, we're going to see this shoot all the way down, because it takes 6 to 12 months or 6 to 18 months for stim pumping to percolate into property and stock. So yeah, I see that happening. Remember, the only way to see true value is to compare an asset against the currency supply. Don't forget that. That's why I don't like property, because it's basically crashed forever. Anywho, hope that makes sense. For now, I'll chat with you soon. Toodles, bye.